The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday. I will have a problem tomorrow, probably. But anyway, 8 o'clock in the morning, you start off with John Logan. Then you go to Larry Pesavento. Then you go to Tom and Tommy. I come in on the fourth hour, do my best to keep up and maintain this fabulous standard that's been set earlier on. Hey, talk about Tiger University. This is amazing. The kind of information that you get at TFNN, I think is rather unique. I just don't know anywhere where you can get it continuously like this all day. All right, let me show you a quick chart here before we go to all the numbers. I had shown this in the den early this morning. I'd shown actually yesterday as we were closing at 4 o'clock. I showed this chart here at peak D. I said we should be getting some kind of a pullback, and that regardless of where we are in the morning. Oh, was that? Wait, yesterday was 4 o'clock. Oh, that was right there. Sorry. That was right there at 4 o'clock at the 2082.50 area. And we did pull back. We pulled back all the way to 27.75. Not very far, but pulled back. Then there started to be a certain rallies over the evening in the 10-minute E-mini chart that we're looking at. And you went to a peak D pullback to 2080.25, establishing that as some kind of a base. Then you went peak A, B, C, D. Remember in the Chapman wave, the objective is to get you at least to a D, but you can go high. And this is a fantastic example. Why? Because look at this beautiful up channel. You went to the C, then you went to the D. But at D, you held very well. You didn't even break the previous set of lows. And you climbed slowly to an E, to an F and a quick G. At that G, I sent a chart to the den this morning as I was doing my E-mini update for my opening call subscribers, and that's where I'll show in a minute what we look at. But I did show the 10-minute and with a peak G, and I suggested there could be a sharp pullback, and that there was a left side, right side price time match, which would take you to the 2081 area. And the dashed line, let me make it pink. I usually make it pink. That is the Chapman wave inside wedge target line. Took you to exactly right here at 9 o'clock. There was a chance of hitting 2081, and bam, 2081. It went lower down. It went where? To the 2080 and then to the 2775 low. That was that low that was established just after the 4 o'clock close. And now what we're looking at is 2077 is the level to be looking at, because the rule in the Chapman wave methodology is if you take out the left side low, you have one bar, maximum two, to climb, and that climb has to take out a previous 9-period moving average. Well, on this chart, I've got nothing. I've only got the Chapman wave notation and some trend lines and arches and cups. There's nothing else. There's no MACD, no stochastic, none of the regular tools. And then what happens is, because it failed to take out that little doji high at 2086, it pulled back and took out the left side low. What's the rule? The rule is you've got one bar in which to close above, and if you close above, you've got to take out the left side peak of importance. Well, that was 2081, failed, tested the low, broke it, went to a trough F. Now, this could be a recycle if there's a break underneath this low. So I just want to do this quickly to show you that it doesn't matter what time frame we're looking at. What we're looking at is the same thing. There are only three patterns that you look at. Straight line moves, whoops, straight up there. Up or down, that's one. Two is an arch. Three is a cup formation, or it could be two an arch and three is a cup, or three is the straight line, but there are only three patterns. Straight line moves, or a cup that comes back to the previous left side high, or an arch which comes back to the left side low, and it could be a V-shaped pattern, but it's the same principle, okay? So Now what we're looking at is that the pattern I talk about, the lowercase h, this is being tested. And as long as there's some strength and you do not take out 2076.25, even if it's by 25 cents, that's a very big negative. But if in fact you can move and close above the high that was just made at 2081.25, and you can get to 21, I'd like to go to 2081.75, that'll say, aha, the Chapman wave lowercase h that successfully tests a low can make, if there was a new buy signal, I don't have that right here because that would entail the stochastic and the MACD. If there is a new buy signal, there could be a rally, and that rally then has to take out the highs of 2083.75. If it does that, you'll be going all the way back to the 2089 area. After such a spectacular day yesterday, and you remember we went to a buy signal for my subscribers. We bought the Dow prior to the opening and the DIA. All I can say is that you should expect some kind of a rest period, especially with options expiration tomorrow. So let's get out of that. We'll move on. FXE was what I was asked about. So I'm going to do the FXE because it's directly related to what I was talking about yesterday. Remember what I said? The dollar, the DXY, made a peak, made a leg F. Where to go? There it is. Made a leg F, and the dollar right now is down 79 cents. I've only got it down 56. I'm a little behind. And that doji candle says at 99.85. Remember what I drew? I drew it. Well, I just drew it. Is the Chapman wave stalk leg formation? There's going to be a big difference between pulling back and just tagging the low of 98.43 that was made in the 12th. Maybe go to 98.23 and then bouncing back. And then if you bounce back quite sharply over 99, that says, uh-oh, be careful if you're long gold, because if you're long gold this morning, that's a great entry point, but you got to be careful because there could be the Chapman wave stalk leg formation, which says within 5 sessions, 5 to 7 sessions, that's daily sessions, that's taking us to next week, Friday. There could be some kind of a consolidation here in the dollar. But if you start to spike higher and you take out 99.85, that's the neck formation. That says you can go even a little higher and then come back again. And that would just say that we're getting really close to the, spoken about the resistance area between 99 and 101. 139 really is the level. 100.40 starts leg C in the weekly chart, which I do believe is going to be made. Now, let me just do this, because it fits in exactly with what we want to look at. Look at gold having a nice rally here from a trough D at 1,062. I still think we're going to test 1,028, the 200-period exponential moving average in the monthly chart. But that doesn't mean to say we can't have a decent bounce. And that bounce says you've got to take out. You can't just take it out and pull back. You've got to close above 1,097.40, the high that was made in the 16th. You do that, and you've got yourself a cup formation, and the cup formation says you can have a very nice rally, and that would take the dollar down another point or so, and that's going to be the big test for both of them. Okay, so we'll get to all the other little ingredients as we go along. I just quickly want to say, remember the DZZ we spoke about? Possible leg F. This could be a peak F if the DZZ at 8.56, down 16 cents, pulls back underneath the gap low and holds underneath 840. Let's do this. Between 840 and 827. That's going to be the cushion that has to hold in the DZZ. What is the DZZ? It is the 2 times DB Gold Double Short ETN. Let's go to our numbers. INDU. The Dow's in a leg B on the upside in the daily chart. The 120-minute chart, it's a gray A in the daily chart. It's up 6 points. I do have to do this. I wanted to do it before. Did in almost all the other indices. You remember yesterday, call from John in Philly, and he was asking about the falling axe formation, Chapman wave falling axe formation. I do think that we have the chance now, but the Dow has to close above 17,790s. Really has to get into the 17,800, and that'll say, wow, very good chance we're going to retest the previous high of 17,977, All-time high is 18,351. Key support, make it real simple, 17,630 to 17,600. All right, let's move on. S&P. S&P right now was down. Now it's down, coming back. It's down just one at 2,082. Great move, single leg A up. Oops, this one did break yesterday. It already broke the Chapman wave falling axe. What's the falling axe? It's just merely the declining cone, expanding cone. And we broke the top of the cone. And that says you can now go to this gray A. Put it in there, gray A. Make it gray. There it is. What does gray A mean? It means you're under the previous high. So it's I call it a retracement failure mode. That's not a negative. It's an explanatory thing. Leg B in the 120-minute chart. Terrific technicals in both the Dow and the S&P 120-minute chart. Stochastics at 97%. That really is a big thing. Now, just wanted to get that, save it. Okay. This is leg B, peak B in the weekly chart. Talking about peak B in the weekly chart, look at this. The QQQ series made a new recovery high. Has to go to 115.43 to break out for leg C in the weekly. I think we're going to do it because the weekly chart is looking spectacular. The weekly in stochastics at 93% and the MACD is expanding. Leg very sharp. This is almost like an A. An A to B equals C to D. This is the lightning rod that you always talk about, that you hear talk about here at TFNN. Fabulous technique where it's a price movement of 1-to-1. It can expand, but you're really looking at a 1-to-1 expansion. I'm going to put a plus, an up arrow here for the 120-minute chart because it really does look good. That's the reason why we want to go long. A couple of reasons why. The technicals were holding. After Sunday night, that turnaround on Monday said to me that this is not bear market material. Bear market material would have been a sharp decline on Sunday night after the horrible news in Paris, and then a considered move to the downside as all rallies were hit with selling pressure from early on, right through the evening. Instead of huge spike up, it would be a push down, and we didn't get that. I like what I'm seeing. There's a breakout in the QQQs and the Chapman wave falling axe, which measures to about 113.98. It's about 10 cents away. If it goes above that, really we'll be testing the 115.42 level. And the support has to be 112.70s. Let's go to the IWM. A lousy move. Even today, it's not acting all that well. Like the New York Stock Exchange, this is down 15 cents at 116.40, struggling. And the NYA, you remember what I said before? I think we've got the divergence that we saw back in 2000, back in the 1999-2000 top, where the NASDAQ took over and just screamed to the upside, leaving the Dow in the dust, old and new. What have we got today? New York Stock Exchange, old. What's new? The QQQs, and it turns out that the Dow, in some funny, strange kind of way, is the new ETF of importance. Dow's up 20, S&P's up 0.46. I'll be right back. We'll continue with this when we get back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, folks, we're back. Dow's up 13, S&P's up 10 cents. Okay, let's get to the nitty-gritties here. What are we looking at? What on earth in this particular environment would make one want to be long? Well, I'll tell you, there are a couple of things. The characteristic of a bear market is that the volatility index screams higher as prices fall, and every single bit of news, whether it's good news or bad news, is treated as bad news. And by the end of the session every day, the futures are very early in the morning weak. They try to rally, and every time, even if it has higher highs and higher lows, it makes an arch formation. By the end of the day, fund managers are getting out, and it closes towards the low, and then the futures open down sharply the next day. We have just not seen that. We just have not seen that. We can, but we haven't yet. So when I'm looking at the different charts, and I know I heard Larry, and I always respect very much what Larry says and what he's thinking and what he's looking at technically, when he said that there are very few good charts, I have to say that the charts that I'm looking at that are good are in areas that you wouldn't really be looking for. And if you are looking for them, you say, good grief, why would GE be acting so well? Yes, it's making a little symmetric triangle right now. It could break either way, but give me a break. It's gone from 1937, not the year, but the price, all the way to 30.90. That is a huge move, and it's still just consolidating right here for the last week. This is it's for me, I've always spoken about this, my Dow Quartet, GE, IBM, Triple M, and UTX, and then I have guest artists sometimes I haven't in for a long time, but DuPont would be a guest artist. What a chart on DuPont. I mean, this is DuPont. It's up huge. Now, it's only up about just over 50% from the all-time high in the 80 area down to the low, the 200-period moving average in the 46s, and now it's at 66, so it's kind of halfway in between. But boy, this has been almost a straight-up move. So yes, there are charts. Look at General Motors. General Motors, which we were long, and we took some profit, and then we got out, and boom. It spiked up to the 36s, and I think this is a leg C in the weekly. Look at the MACD. Look at the stochastic. In fact, I've got a Chapman wave squash pattern here, which says you go to the C, and then you might take a little while before you a bit of a pullback, and then you'll get the D. I mean, come on, this is a nice looking chart. Look at what we were looking at the other. Oh, Visa. There are some wonderful. Look at this Visa leg C on the upside, leg D or /B in the weekly chart, monthly chart leg E. But look at the way it's held the 9-period moving average. Yes, I'm talking about certain isolated stocks, and there I'm in agreement. I can find you. In fact, our portfolio has more shorts than longs, but that's okay. We're just going to deal with that because the stocks that are acting well are acting extremely well. So, all right, let's get back to our story. And our story says that I want you to go back to the FXE. The question was, I got an email. Let me just double check emails because we've got a bunch as usual. Right there, I made it a little easier so I can see it. Okay, we'll just go in order. GT wants to know about, a lot. Okay. FXE. And FXE is the Currency Shares Euro Trust. And basically what you're looking at is let me show you, EUR, USD, keep your eye on the chart, daily, weekly, monthly, 120-minute chart. Here we go. And now you're looking at the euro-dollar currency pair, which they kind of trend together. They don't necessarily have to have exactly the same shape, but they trend together. So euro dollar acting beautifully. And as I said to subscribers for 3 days now, spoke to Tom when I was interviewed on Tuesday, and I said, there's a chance we're going to see the dollar reverse. Whether it reverses sharply or not, it doesn't matter. We've got to see what happens. Will the stock market continue higher? Because there's been a parallel between the rising dollar and generally the rising market. That's not to say there's a symbiosis that's just exactly the same. We're going to see what happens. Now the Dow's up 26, the S&P's up 140. I love what's going on because it's under the radar. Could all be options related. I don't care. We've got to do what we've got to do. Look at the MACD in the euro-dollar currency pair. Let me just go to the FXE because that was the question. And look, same thing. So here's the FXE. It's made a peak D. Let me show you the Chapman wave methodology. Look at that. Peak E, peak D, makes lower lows. I gave you a left side, right side price target match. It broke down, and now we've got to see it. The FXE has to close decisively above 106.27, the low of the 20th of July. It's at 105.31, up 93 cents. Yesterday's low was 104.01. So we've got to watch these, and I'm suspecting that we can call this a bounce. Is it a bounce of substance? I'll try to get into that. Yep, we've got time. I'll try to get into that in the next break. Basil Chapman, Tiger Technicians, I would love to take your calls. Question about HYG.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Look, a couple of things I got to do. Tampa Bay Auto Show. I got an email about that. The auto show's on. I think it's starting tomorrow, maybe, in Tampa Bay. Should be fantastic. I'd like to have some kind of update if someone can give it to me. Next thing I got here is Andy's webinar on Thursday evening at 6:30 to 7:30. I mean, really, let me just find this right here. Look at this. Crude oil prospects for coming into the December 4th OPEC meeting. Andy Hecht will be hosting a free live webinar for subscribers to his weekly newsletter, the Technomental Commodity Report, on Thursday, November the 19th from 6:30 to 7:30 p.m. Eastern Time. If you really want to dig deep, if you want to get into the core, the nitty-gritty. I mean, we do technical analysis, all that stuff, and he does technical analysis, but he puts it together with these fundamentals, and he has decades of absolutely understanding the integrity of what he's looking at, the core makeup, and the crude oil, if ever there was something. Look at this. Crude oil right now is down, well, I shouldn't say right now. It had been down. Yep, it's still down. So it's down. Yeah, it's about to test the low. And with the dollar, if the dollar really is going to pull back sharply, you would expect that crude oil, which invariably tries to act in an opposite way to the dollar, there is a relationship, not necessarily price to price, but trend to trend. And in this case, The crude oil weekly chart suggests with this arch formation that it needs to test the 39.65 in the continuous contract low of the 28th of August. But this H pattern can at any point suddenly spurt upward. And that would say the 53 9-period exponential moving average in the monthly chart is a huge thing to try to achieve. 12 points, and it just hasn't even, every time it's gone even closer. It hasn't even broken there since it broke down way back in 2014, back in July. So I'd love to hear what Andy's going to say, because this is a very important moment for crude oil. Why? Because there is a relationship. Look at this. XAL, the airline index, is rallying a little bit, but it's way off the highs of 108.16, and it's trading at 91.50. And you would expect that there'd be a fantastic, theoretically, with crude oil down here. Why is the ARCA airline index lower? Why did it go down below 80, 20% correction, and now it's at 91? It's still down very sharply, 17 points, more. And what we're looking at is what's going on in the airline index. Great session today, up 162 at 91.49. So we'll be looking at that, and the resistance is at 92. 92 to 92.20. That's going to be the resistance to monitor. So the relationships of many things to crude oil is very important. So if you have a chance, test it out. You'll get Andy's newsletter for free. Take this opportunity. Believe me, you will learn a great deal. So let's go back to our story. And the story is that we had questions about, let me just do the FXE one more time, just to be clear. FXE is trading at 105.38. If there is any movement to the downside between now and Wednesday afternoon at 3 o'clock, this coming Wednesday afternoon, just before Thanksgiving weekend, and there is downside move that takes it below 104.50. It's not very far from where it is now. That's just going to say no energy whatsoever, and you'll see the dollar going back towards that 100 area, towards trying to get to 100. But if the FXC is able to take out that high that I said, 106.08, the high of the 12th, it suggests that the rally could continue, and I'd expect an arch. I'll even draw it in. If it's going to be there, it's going to look something like this. And it could go to the 106s. No, it's going to, if it's going to rally, it has to go to the 107.40s where the 9-period moving average is in the weekly chart. I don't know if it's going to get there, but I'll do it. And I'm still expecting it's only an arch formation. It was only an arch formation. So this is what we're looking at in terms of all the areas that are related to the dollar. So let's look at gold again. GC. Gold is trading up 14. At my level, it's 14. Yep, at 14, it's at 108, 1,082.80 cents. Right on the 9-period moving average, trying to break above. Here's the 120-minute chart leg A, B, C, D, E. This could be a brand new E/A. And this is going to be very important. Why? Same thing. The gold contract has to break and close. It can't just hit it. It's got to spiral above 109.7.40, get into the 1100s. The moment it gets into the 1100s, 1104 will be your target on the upside. I'll draw in another arch. And that's my thinking, that we've got an arch formation here. How the market handles the weaker dollar is going to be really important. Okay, I think we've covered that quite a bit. Next question. RUT. The IWM, I just did the IWM. I'll do it again. IWM is stalling. I just don't think that's not the place to be. If you want to be in anything that's moving to the upside, it's the Qs, and it is in a certain sense the Dow. Those are the areas that seem to be working at this particular time. Crazy, because the Qs have a completely different mix to the Dow, but Dow does have Apple, and that made a big difference to it. All right, so in the meantime, 115, what's the 200-period moving average? In the 115.50 has to hold the support, because if it doesn't, it's going to be probably looking like a failure pattern, unless it's just dragged up because the general market goes higher. I can just tell you this, that Friday options is expiration. If by Monday afternoon at about 2:10, in middle, just getting closer towards the end of the day, 2:10 Eastern time, the IWM is actually trading in the 117.10s. So that's a long way to go for it, because it really struggles to move. If it can get there, then all of a sudden the 118.19, the 200 period exponential moving average will become a magnet. I think it's going to have a tough time. Next question. Can you say? Radio question. Oops, the radio question. So the radio question is, CME asks, hey Basil, great call on your DI long yesterday. I'm on board with you and have a full position this time. Could you please cover whether or not you would add to index longs on this consolidation pullback? You didn't add in Traders Corner, just wondering why. Okay, really good question. There are a couple of reasons why I didn't add right now. Because we have other positions. Also, for my opening call, when I get over a certain number, regardless of whether they're going up or down, it's just never a good thing. I need to be taken out of something. I need to have more cash at our disposal. It's really not it. I just can't. It's really hard. I mean, look how many. I don't even know. How many did I have today? I had. Let me just check it out. I had 20 bullet points. So besides all the work that I do, I have 20 bullet points on the different indices and the different stocks and what we want to look at and what we're in. And I missed out on yesterday. I blipped off because there were too many. I took my SOXX, that's 3 times long, the semiconductor index. It would have been a fantastic trade. I took it off because I don't know if I can handle all this. Then I was upset, of course, because that acted so beautifully. But you know what? This is all I can do. So I'm sorry, I didn't add. I might add under certain conditions, but we've got some other stocks that if it's going to work at all, these stocks that we're looking at are the ones that should participate very nicely. So that's kind of the way I'm looking at it. But thank you. Yeah, so I'm very pleased you're on board. And let's go to, and the next question is on Boeing. This is I spoke about Boeing yesterday, and I actually was a little surprised to me. I looked at it, and then I forgot about it. I looked at it maybe 3 days ago, it was acting okay. Look at this. It is almost at its recovery high. 149.60 was the high on October the 30th. It pulls back. It was only a pullback. Goes to 141.59 on the 12th. That was the low. Now it's reversed and it's gone to 149.44. It is 17 cents away from breaking that previous peak D on the left side. And that the moment it gets there, that's leg C in the weekly. As I said before, we can all see horrible stocks. This Boeing of all things at this particular time with what's going on, why is Boeing acting so well? But it's acting very well. I don't know, I can't answer that, but the stochastic in the weekly is at 91%. The MACD is good. It's giving me a Chapman wave squash where it says it should go to a C. Then it might take a little time to kind of pull back and to digest. Yeah, this is really interesting. So let's go back to the question in the den about HYG. Actually, I had 2 questions. One about IBM, one about HIG. HYG, which is the iShares iBox High Yield Core Bid ETF. Bond. Core bond ETF. This is suggesting that it's really struggling. It's made an arch formation. It tried to rally, made a little mini arch formation. I can just tell you at 83.17 down 44 cents, bonds are now, did I go through bonds? No, I didn't. I've got to go do that right now. Look, yield, this is 82.81 on the bond fund. And what's happening is it bounced, didn't even hit the 9-period moving average, and now it's pulling back. If it takes out the low of 82.81, if it goes under 82.60, give it a little room, it's going to test that low on the left side. So all I can say is I don't see anything yet. When bonds actually start to tank and yields go up, I think it's going to be real quick. You're just going to woof. It's going to be like a rocket ship to the upside. The Fed won't even know what to do. It'll be so quick. So that's what I'm thinking. And they say December, the way things are acting, I got a feeling they're going to stall. They're going to stall again. All right. So next question is IBM. So I don't see anything yet in that HYG. Now IBM is up $1.72, up 1.27%. Let me show you something. I've been very negative about IBM. Still looking out very negative because I think it has to hit the 127 200 period exponential moving average. But wait a minute. You've been talking about that, Mr. Chapman, for how long? For a very long time. And where did it get to? It got to 131.65. A stock that was at 215.19 just a few years ago and has made lower lows and lower highs consistently, getting to within 4 points of the target, says right now there could be a bit of a bounce. And that bounce might be a surprise. Why? Because it could help the Dow. You see, look at UNH, a stock that I've been negative on for quite some time. UNH is down 524 at 112.01, bad earnings or whatever, outlook, whatever it is. But the fact is, it's still holding pretty well, closer to the highs of 120, let's call it 126 to 127. But it is breaking down. And that's the rotation you've got to be looking at. And it's an impact, I believe it's impacting, I think it's in the IBB. So it's impacting the IBB because the IBB is down 4 at 334. So that's part of the Dow. UNH got moved into the Dow. Dow is a completely different vehicle than it was 4 years ago. Just very different. Now, when I look at the UNH and I look at the XLV, which we were short, we got out at a break-even trade yesterday, now it's pulling back again. We were short at 70.79 and we got taken out at 70.79, I believe. Or did I make a little profit? I can't remember. Still on shorting list. Let me just have a quick look. XLV. Yeah, a break-even trade, zero gain, zero loss. And it's still, to me, in the category, and that's what I'd be looking at, the great winners of the previous few years, you're starting to see a breakdown, and the breakdown is significant because look at AZO, struggling to get back to the highs. It might, but boy, it's struggling. That's in the auto area. Look at Panera, I said this is a hat-trick top way back, and it's way down at 172. It's up 152 points, but it was at 199, and it came down to a low just a week ago of 165. That's a huge move for that stock. Almost 90 points. That is a huge move, and that says there's a hat-trick top there. So yes, if you look at the different sectors, I got a question about PANW. See, what we need to do is very important. Go through the sectors that had been great. Palo Alto Networks Inc. made a peak D all the way at 200.55 in July, plummets down to 140.39, round number, 191 high. And then what happens is it goes over the 9-period moving average. So it's holding very well. Okay, is the question, going to break out of? Yes, I like it. You see, I think that there's something going on right now. It's very subtle, but I think what we're looking at is some of the stocks that were big winners, but have already had a huge decline. In other words, going from 200, look, going from 189.72, the last high peak D, January 21, down to 150. Any way you cut it, a 40-point decline is a 40-point decline. And 40 points from 18, that's, what is that? It's about 25% pullback, right? So what we're looking at, more. And what we're looking at, yes, I think it's going to try to tag 169 round number high of the 4th of November. All I can say is that this is the kind of stock that has a little bit more appeal to me, because if it holds 161 to 162 support and it takes out and closes above 169, that says to me that can be considered leg C, and it should go higher from there. So this is the kind of stock that appeals to me just on a shorter term basis. So now the Dow's down 9 and the S&P's down 3. This is going to be a choppy day. Let me see what's happened here in my 10-minute chart. Yep, there it is, another arch formation. Going to have to watch this real closely. I'll be back.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
I've always got a whole bunch of questions during the break, but let me go to Mark in Denver. Mark, how are you?
Basil, good. How are you?
I'm well, thank you. You'd like to look at?
Yeah, real quick. This is a little thing I'm looking at. I'm looking to go long the IBB for a peak D to get to the 341.25-ish at the least, and then possibly go short after that. What do you think?
Are you talking about a D in the daily? Because I've already got a peak E. It would be more like an F if it broke a 341.25.
Maybe I'm counting wrong from way back.
Yeah, you got to count from the low of 285 back on the 28th of September. Then
Correct.
You've got A, which is A minus. I see what you did. A minus at 323.59 on the 5th of October. Then you pull back and you made a little A right there on the 7th at 311.46 inside buy signal. And then B was 312.30 on the 12th. Then C goes to 321.06 on the 19th. Then you get D and E. So what you did is you've counted without the inside bar below. Remember, every single peak, that's your only obligation in the Chapman wave, is to count each peak and each trough. So
You're
it's
counting
basically,
that, okay.
it's a restart. Think of it as a restart.
I see,
And there it
okay.
is. Now you see it? And that's
I
the
see.
reason why I didn't want to do anything yet, because I wanted to see how today's candle worked out, because it was a very powerful candle yesterday. The MACD, though, only went slightly positive in the stochastic rally, but no big deal. I think this is a hat trick top in the monthly. I think the weekly is going to fail. I've just been waiting for a little more. I want a little leeway before I actually commit myself to adding to the short position on the IBB, because I wanted to make sure also that there wasn't a trade in the BIB 200% long to think that just to negate any move further on the upside, because we had a fantastic gain from 393 down to 284. I'd be giving back a huge chunk if it actually went up 15 or 20 points from here. So,
so you don't think there's no left side, right side time price matchups with 341.25?
I do see a chance of a cup with a little bit of a ladle pattern, that there is a chance to move a little higher. But boy, this is the area between 341 and 3, anywhere in the low 340s, tremendous resistance, unless you're now getting a buy signal that just negates completely everything I'm looking at.
Okay.
I don't think so. I think the monthly is giving me a hat trick top. So
Okay.
I'm going to make, you've got puts already, right?
No, I've got nothing. I was thinking of.
Oh, you got nothing.
I was thinking of waiting till it got to 341.25-ish to go short.
So then can I make a suggestion? You also use options, right?
I usually buy puts, yeah.
Okay, if you're going to use options, you can go to December or January,
Right.
and you could go to go a little closer, because treat it as if it's a stock that you're buying, but don't get carried away. And you
Yeah.
could go to the 340, 335 or the 340 put, and don't get carried away. Just get into position, because that's going to give you a tremendous amount of information.
Okay, thanks.
Okay, thank you for calling. So, folks, let me just do this. We're about to break, and don't forget, you've got Andy's webinar coming up this afternoon, this evening at 6:30. You've got Daryl coming up in a moment, and the other thing that I wanted to do is just real quickly, AYI. I wanted to do this for Dan because it looks spectacular. It looks great. It is Acuity Brands. I don't know what the heck they do, but the chart is fabulous. I would say that the pattern I'm looking at says if there is a pullback at 223.33, down 190 right now, 217 to 215 is the containment area. That's where I hope, and Dan, send me an email if it gets there. That's where I want to revisit this. I've looked at it a long time ago. I haven't looked at it for a while. It really looks terrific. Something's going on that's very positive. Meantime, if you are long, don't do anything. Just stay in that position. I would say you could just maybe take a little bit off if it breaks 217, but really it's acting very well. I'll try to look at it on Monday again. And that's what I wanted to do there. I had a quick question about the TNX. The TNX is acting, I think at this point the yields are coming down because the TLTs, look at this TLT, fabulous move, gap up to the upside. So folks, stay tuned. You've got a great program here. Check out my opening call. I think you'll find it really interesting. Go to the front page of TFNN. Just get a trial subscription. This is a perfect time. And I'll be back. I might not be back tomorrow, but I'll be back Monday.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,